7 money habits that quietly make you rich. Here's something nobody told me when I got my first real paycheck. I thought getting rich meant earning more. So I worked harder, got a raise, got another one, and somehow every single month I ended up in the exact same place. Not broke, but not ahead either. Just treading water. It took me way too long to figure out what was actually going on. It wasn't an income problem, it was a habit problem. And once I fixed the habits, everything changed. Not overnight, not dramatically, quietly, which is exactly how real wealth works. So today I'm sharing 7 money habits that slowly, quietly, almost invisibly started making me richer. No side hustles, no get-rich-quick stuff, no complicated strategies, just simple habits that compound over time. Let's get into it. Habit 1. Pay yourself before your brain knows what's happening. Here's a question. When does most of your spending happen? For most people, it's the first 2 weeks after payday. The money lands, you feel flush, you order the nicer thing, you treat yourself, you say yes to stuff you'd normally hesitate on. And then week 3 rolls around and you're suddenly very aware of your bank balance. Sound familiar? There's a reason for this. When money sits in your current account, your brain reads it as available, and available money gets spent. It's not a willpower thing. It's just how our brains work. So the fix isn't discipline. The fix is speed. The moment your salary hits, a chunk leaves automatically. Before you've had breakfast, before you've checked your phone, before your brain has even registered that the money arrived, it goes straight into an investment account or a savings account, somewhere you don't see it every day. Now your brain does something interesting. It adjusts. Within a few weeks, you stop missing the money. You live on what's left, just like you always have. Except now, quietly in the background, money is stacking up. I set mine up in about 10 minutes online. Automatic transfer, same day as payday, every month without me touching it. The best financial habit I ever built wasn't about spending less. It was about making sure I never got the chance to spend it in the first place. Habit 2. Stop upgrading your life every time your income goes up. Let me tell you what happened the first time I got a significant pay rise. Within 6 months, I had a nicer flat, better dinners, a gym membership I used twice, subscriptions I forgot I had. I wasn't being reckless, I just expanded. And this is so common it has a name. Lifestyle creep. It's the slow, invisible process of your spending rising to meet your income. And the sneaky thing about it is it never feels like a choice. It just happens. You earn more, so you deserve better, right? Nicer coffee, better holidays, upgraded everything. And before you know it, you're earning twice what you used to and somehow still feeling like there's nothing left at the end of the month. Here's what breaks the cycle. When your income goes up, commit to keeping your lifestyle the same for at least 6 months. Just 6 months. Whatever extra comes in, send it straight to your future self before you get used to having it. Because here's the thing. You were fine before the raise. You were living, paying bills, probably even enjoying yourself. That version of your life wasn't lacking. So just stay there a little longer and let the gap between what you earn and what you spend start doing some serious work. Habit 3. Buy things once. I used to think the smart move was always buying the cheaper option. Save money now. That's the goal, right? But I kept noticing something. The cheap version of things I used every day never lasted. The cheap bag fell apart in 8 months. The cheap headphones crackled, then died. The cheap knife went blunt after 3 weeks and I never used it again. And every single time I went back and bought another cheap version, or eventually gave up and bought the good one anyway. Which means I paid twice, sometimes 3 times. There's a concept I call the cost per use test. Take the price of the thing, divide it by how many times you'll actually use it. A $30 item you use once has a cost per use of $30. A $150 item you use every day for 5 years? That's about 8 cents per use. The expensive thing is almost always cheaper. This doesn't mean blow money on luxury for the sake of it. It means for the things you use regularly, buy the best version you can reasonably afford. Buy it once. Use it forever. Stop replacing. Fewer things. Better things. Less money spent overall. Habit 4. Treat your time like it has a dollar value. Here's a weird thing. Most people will spend 20 minutes on a comparison website to save $7 on a phone bill, but they won't spend 20 minutes figuring out how to earn an extra $500. We're weirdly protective of money and surprisingly careless with time. But time is the one thing you genuinely cannot get back. Money you lose, you can earn again. An hour that passes is gone. So here's a habit that changed how I think about everything. I worked out roughly what my time is worth per hour, not just in salary terms, in life terms. And then I started asking, before saying yes to anything, is this worth the cost? That meeting that could have been an email? Is 2 hours of my time worth whatever comes from attending? That errand I keep putting off? Would it be worth paying someone to handle it so I can spend that time on something that actually matters? I'm not saying outsource everything. I'm saying start treating your time like it has value. Because once you do, you stop giving it away so freely. You stop saying yes to everything. You start being deliberate about where your hours go. And weirdly, being more intentional with your time almost always makes you more money too. Habit 5, make buying harder on purpose. Okay, this one sounds strange, but stick with me. A while back, I had about 6 shopping apps on my phone. All saved cards, one-click checkout, notifications telling me about sales. And I wasn't shopping because I needed things. I was shopping because it was easy. Bored on the sofa? Open the app. Something in the basket within 3 minutes. And the apps are designed that way. The tech companies behind them have spent billions making it as frictionless as possible. No pause, no thinking, just buy. So I flipped it, deleted the apps, removed the saved card details. Now, if I want to buy something, I have to open a browser, find the site, log in, enter my card details manually. Sounds like nothing. But that 90 seconds of friction is enough to kill a huge number of purchases that would have just happened on autopilot. Because here's what that pause does. It forces a tiny moment of thought. Do I actually want this? Do I actually need this? And most of the time, the honest answer is no. I wasn't shopping because I wanted things. I was shopping because there was no reason not to. Remove the ease. Remove a lot of the spending. Habit 6, audit your life every few months, not your finances, your whole life, your subscriptions, your habits, your commitments, your wardrobe, your social media follows, all of it. Here's why this matters for money. Most of what we own, subscribe to, and spend on was decided by a past version of us. You signed up for that streaming service 3 years ago. You kept paying. You still paying? You bought those clothes during a phase you're not in anymore. Still wearing them? You followed those accounts when you were interested in something you've since moved on from. Still watching? Every few months, I do what I call a life edit. I go through everything: subscriptions, spending patterns, physical stuff, digital habits, and I ask one question. Does this still serve the life I'm actually living today? Not the life I used to live. Not the life I thought I'd be living. The actual one. Right now. Anything that doesn't pass that test? Gone. And here's what I noticed. After doing this consistently, my spending dropped without me trying to spend less. Because I stopped paying for the old version of my life. Habit 7. Let boring investments do the heavy lifting. This is the one most people don't want to hear. Because it's not exciting. There's no big win, no clever move, no story to tell at dinner. But it is the habit that matters most. Here's what most new investors do. They hear about a stock from a friend. They join a trading group online. They start checking their portfolio every day. They buy when they're excited and sell when they're scared. They're doing loads, and they're almost certainly making less than if they'd done almost nothing. There's decades of research on this. The average investor consistently gets worse returns in the market, not because they picked bad stocks, because they kept moving, they kept reacting, and every reaction had a cost. Fees, taxes, emotional decisions, missed recoveries because they sold before the market came back. The minimalist approach to investing is the same as the minimalist approach to everything else. Cut the noise, pick something simple, broad, low cost, set it up, automate it, leave it alone. A boring index fund left untouched for 20 years beats the overwhelming majority of active investors. Not because of some genius strategy, because of patience, because of nothing. That's the habit, not doing more. doing less, on purpose, consistently. Here's the thing about all 7 of these habits. None of them are dramatic. None of them will make you rich next month. But that's the point. Real wealth doesn't arrive in one big moment. It builds quietly in the background. While you're living your life, the people who get there aren't smarter. They're not earning 5 times more. They just started earlier, stayed consistent, and stopped doing the things that were quietly working against them. And here's the most important thing I want you to take away from this. You don't need to do all 7 at once. Pick one, just one. The one that made you think, yeah, that's me. Set it up this week. Let it run. Then come back and add another. Because the gap between where you are and where you want to be isn't closed in one big leap. It's closed one quiet habit at a time. And you've already taken the first step just by watching this far.